In this episode of Safe Money Retirement Radio, we'll discuss the differences between having money and having true wealth, explore 6 ways to prosper from annuities, and look inside a case file where a 45-year-old small business owner needed to set up a retirement plan. Let's get started.
Is your retirement money safe? Really safe? Find out today on Safe Money Retirement Radio with your host, Tim Wood.
Hello, and welcome to another episode of Safe Money Retirement Radio. I'm your host, Tim Wood. This podcast and on-air show is dedicated to those of you who struggle with the fear of losing your retirement savings because of forces outside your control. There are ways you can still earn market-like returns without any market risk and cut the fees you're paying to a broker, all while knowing your money is completely protected and safe. So many retirees or soon-to-be retirees are losing sleep every night worrying about whether they will be able to survive and even thrive in retirement. And it just doesn't have to be that way. A Safe Money retirement plan has 3 parts: Medicare, life insurance, and a lifetime income plan. Once all 3 are in place, the stress levels can disappear because you can know for sure that your retirement funds are safe, you have the health coverage you need, and your family will be taken care of if and when life events happen. Give me a call at 855-PLAN-ADVISE or 423-262-7919, or visit safemoneyretirementradio.com now for more details. Let's spend a few minutes discussing the differences in having a lot of money and having true wealth. So many people out there think having more money in the bank or in their retirement accounts will bring them peace of mind. But I work with retirees or soon-to-be retirees every day that have a huge nest egg set aside for retirement and are still incredibly stressed. Many times even more so than those with smaller retirement savings. Now, why is that? It's because having a lot of money and having true wealth are 2 totally different things. One of my goals is to help people move from having money to having wealth. Now, let me explain what I mean. Having a lot of money comes with a lot of stress and worry about keeping that money. Is the market going to drop? Will I have enough to last my whole retirement? Will I be able to live like I want to in retirement? Will I lose everything if I ever have to go into long-term care? And the list of these questions just keeps going on. All of these stressors take their toll on a retiree's happiness and peace of mind. So what makes someone transition from having money to having wealth? Taking all of those stressors away so they can enjoy their retirement without worrying about the market or whether they will run out of money or live the life they want. Now, how can you accomplish that? The single best way I've found to help people become truly wealthy is to get them into a safe money retirement product that will guarantee them that their retirement nest egg is completely protected from any market losses of any kind, while still allowing them to grow. These products are called fixed annuities, and there's a bunch of different kinds of them. And they can include a guaranteed income you and your spouse can never outlive, which means even if you lived a very long life and withdrew your account balance to 0, you would still receive your guaranteed income payments for as long as you live. That's true wealth. These products can also include a long-term care rider that can multiply your income for a set period of time if you are ever in a long-term care situation, which will help cover that extra expense. True wealth means you can sleep well every night, knowing your lifelong savings is completely protected and that your income will never stop for as long as you live. That is what separates those with a lot of money from those that have true wealth. Peace of mind for the long haul. True wealth is priceless and what we all strive for, and I can help you find it as well. Just log on to safemoneyretirementradio.com right now or call me at 855-PLAN-ADVISE and I will be happy to help you find your true wealth plan. And don't forget to register for your free copy of the Safe Money book and retirement kit on my site or call me and I'll get one right out to you. In this week's noteworthy retirement news, we'll look at 6 ways you can prosper from annuities that you may not have thought of. Starting off at number 6, you can use an annuity to reduce your RMDs, or required minimum distributions. And while an annuity won't get rid of your RMD requirements, you can meet this obligation by collecting a fixed annuity payment as well as by cashing out other investments. And if you need to take out more than the scheduled annuity payments to satisfy the RMD, some insurers will waive any surrender charges for tapping the money early. Number 5 is getting coverage for long-term care. Under the Pension Protection Act, the long-term care payments are tax-free. This includes any investment gains from the annuity itself. Another advantage is that the underwriting for annuities with long-term care coverage is much easier to qualify for. For people with some healthcare issues, they may not be able to qualify for a standalone long-term care policy, but they may very well qualify for this type of annuity. At number 4, delaying taking your Social Security. Although you can start collecting Social Security at age 62, the monthly amount increases every year you wait until age 70, when you must begin taking benefits. This works just like a fixed annuity, and the difference can be significant. For example, a $708 per month benefit for someone who starts taking it at age 62 becomes $1,013 at age 67 and $1,253 at age 70. Those higher benefits last your entire life and even continue for a lower earning surviving spouse who potentially could swap a smaller benefit for your larger one after you're gone. Number 3 is transferring wealth to your heirs. An annuity with a death benefit directs the remaining value of your contract to a beneficiary in a lump sum or a series of payments. You could also get a joint life annuity policy. Most people do this with a spouse, but you can pick anyone, including your child. The payments come to you at first and then continue for your survivor. At number 2, annuities can be a bond market hedge. Lifetime payments are not your only option with these products. You can structure annuity payments for a set number of years, which opens up other strategies, particularly with investing. As a short-term plan, you can set up a fixed immediate annuity to pay out over 2 to 5 years. That way, if rates rise, you'll have your money back to take advantage of the higher interest. And at number 1, you can use the bucket strategy. Some fixed annuity products allow you to change what index your annuity is linked to on an annual basis. So you could have half of your account growing at a fixed rate and half of your account growing with the S&P this year and change that to a completely different strategy next year if the rates change. It gives you plenty of flexibility and the ability to adapt to changing market conditions. Give me a call at 855-PLAN-ADVISE or visit SafeMoneyRetirementRadio.com for more details. In this week's case file, we'll look at a 45-year-old small business owner who needed to set up a retirement plan that had 0 chances of losses and that he could add funds to when he had them available. After a thorough discussion, we determined a fixed index annuity with a flexible premium was a perfect fit for him. His retirement would be completely protected and still have a strong growth potential, and he could add to it when he had the funds to. Flexible premium products allow you to add funds to them multiple times a year throughout their lives. He was so glad to find a plan that was exactly what he was looking for, and I can help you find a plan as well. Just give me a call at 855-PLAN-ADVISE or locally at 423-262-7919 or visit SafeMoneyRetirementRadio.com right now, and don't forget to register for your free copy of the Safe Money book and retirement kit. For today's full chord, I want to talk about Father's Day, and I want to thank all the fathers out there for all they do and all they've done throughout the years, and especially my dad, who has supported me and given me strength throughout the years. Thanks, Dad. I love you. General Douglas MacArthur said, "By profession, I am a soldier, and take great pride in that fact. But I am also prouder, infinitely prouder, to be a father. A soldier destroys in order to build. The father only builds, never destroys. With Father's Day coming up this Sunday, we all need to thank all the fathers out there that have built up their children and helped them grow into adulthood. Happy Father's Day, and God bless you all.
Are your retirement investments safe? Really safe? Or does your plan advisor work for the insurance companies instead of working for you? It happens more often than you might think. Tim Wood is the independent plan advisor that many of your neighbors count on to guide them to a safe and prosperous retirement while eliminating the worry and hassle others face daily. Call 855-PLAN-ADVISE. That's 855-PLAN-ADVISE. Or visit SafeMoneyRetirementRadio.com for your free copy of our Safe Money book, Protecting You from Losses, Fees, and Inflation. Go to SafeMoneyRetirementRadio.com now, and we'll send you the Safe Money book. It's absolutely free. This message is brought to you by Tim Wood and theplanadvisor.com. Medicare, life, and safe money retirement made easy.
Thanks for tuning in to this week's Safe Money Retirement Radio Show. Join me again next week to continue your free Safe Money Retirement education. Until then, keep it safe and visit SafeMoneyRetirementRadio.com. Take care.